Thanks. Yeah.
Moving on the hot seat today, Bengaluru-based EV OEM 3ev Industries has closed a 120 crore rupee Series A round led by Mahanagar Gas Limited, marking MGL's first strategic bet in the electric mobility space. Now, with this funding, 3ev plans to scale manufacturing, expand its charging and aftermarket network through its new 3C division, and accelerate R&D across regenerative braking and advanced materials to solar-enabled cold chain EVs. Now, the company has nearly doubled vehicle sales in FY25 and is targeting positive EBITDA next year. And to break down the deal, the tech and the road ahead, joining me now is Peter Wokner, MD of 3ev Industries. Peter, welcome to Startup Street. Like I mentioned, Mahanagar Gas Limited has made its first strategic bet in electric mobility with 3ev. What does their backing mean for your long-term roadmap? Does this investment open the door to deeper gas-to-electric energy partnerships with MGL, especially around charging infrastructure?
Yes. Well, first of all, thank you very much for inviting me today, and good morning to you. The support and the investment from Mahanagar Gas MGL in 3ev Industries as the lead investor in our Series A is a terrific validation of all the work that we've done and the business model that we pursued from day one to provide sort of a full turnkey offering for EV mobility in the three-wheeler space, the category L5 space. So the support of Mahanagar Gas is not purely financial. There are very strong strategic synergies between what is a very mature, financially strong business at MGL and, of course, more of an emerging growth-oriented business at 3ev Industries. It does help us to scale our manufacturing, although we do have already substantial manufacturing assets in Bangalore. We're in Dodbalapur on the north side of Bangalore, as you mentioned. But very importantly, our 3C aftermarket division will also benefit not only from the financial support, but also from the strategic alignment.
You know, picking up, Peter, from what you just said, tell us or elaborate on what does the Series A fundraise unlock for you across, manufacturing, charging, and aftermarket services?
We're currently serving customers in 5 cities today in our aftermarket. That's where our customers and our installed base of vehicles that we manufacture are located. We need to deepen our resource availability in those 5 cities. That's Mumbai, Bangalore, Chennai, Coimbatore, and Hyderabad. So we first want to fully build out our aftermarket resources from charging, which is full turnkey battery solutions from swapping to fast charging through our partnership with Exponent Energy, which is a very novel technology-driven fast charging business, and then Neuron on the battery swapping technology with LFPs. But even more so, building out our care capabilities, which is the second C in 3C. It's charging, care, and conversions. That is what's going to support a larger base of vehicles and customers in our markets to ensure that uptime. Again, we are in the B2B space. All of our customers are commercial enterprises.
Yes.
Nobody's driving their children to school in our vehicles. They're there for work. And uptime is a critical variable, and it's a critical KPI that our customers rely on.
Yes. You know, Peter, you've called the Series A as the catalyst for your new 3C division you just mentioned. So tell us, what does charging, care, and conversions encompass, and why is it central to last mile electrification? Also, how soon can we really expect a scale rollout of the 3C network across major cities?
Yes. Well, I mean, EV mobility is still in its early stages, both in India as well as globally.
Okay.
So the maturity and depth of resources in the market is still at an early stage where availability of aftermarket support, if the vehicle encounters some maintenance or service requirements, or battery access for recharging or swapping availability, still remain limited in the marketplace. 3ev set out to build a full partner ecosystem so that we could give all of the different elements required to operate these vehicles. We were always focused on what is the end user requirement and how do we provide an envelope of security and reliability to promote that. It is only that end customer that supplies the revenue that feeds everyone in the supply chain, from the fleet owner, the vehicle owner, to the OEM, all to the parts vendors and suppliers that we work with at 3ev Industries. So we wanted to make
Okay.
sure that we were giving a very strong and clear value proposition to that end user. That means that providing those 3C services was a critical commercial a leverage point for us from day one.
Okay.
The investment of Mahanagar Gas allows us to strengthen that, where we've moved over the last 5 years since we were created, last 5, 6 years, from technical proof of concept, where we wanted to build a robust vehicle. We essentially wanted to max out what was allowable under the rules for category L5 EVs. We then wanted to understand the premium commercial engagements that electric vehicles were suitable for in this heavy duty format, and then create an ecosystem of support around them so that our end users, our customers, could have that reliability, again, at an early
Sure.
stage in the market.
Yeah, Peter, you have nearly doubled vehicle sales from 438 units in FY24 to 834 projected in FY25. What's driving this surge, if you could quickly tell us?
Yes, sure. These are still very small numbers. I mean, there are lakhs and lakhs of three-wheelers out there, and we talk about commercial vehicles. There are also lakhs of those on a four-wheeler format, light-duty commercial vehicles. So the numbers are small. We're a humble company, but we understand the enormous opportunity to scale from here. What we don't do is we don't build to fill a channel. We don't fill a dealership channel. We build to end-user demand. So that's what's really been driving this.
Okay.
Large enterprises, e-commerce companies, fleet operators serving those larger enterprises seeking EV mobility due to its greater productivity and greater efficiency.
Sure. Let's talk about revenues, Peter. Revenues have jumped 3x to 54.7 crore rupees in FY25. You're targeting 65 crore rupees and positive EBITDA by FY26. What's the execution roadmap to hit these numbers?
Sure. Driving towards profitability really was sort of a key mandate for us as a company. Obviously, revenue growth is important, and we see enormous scope to scale our business in terms of the top line going forward, given the size of the marketplace. But to be a healthy company, we needed to drive towards profitability. Our manufacturing division is already EBITDA positive and will be driving towards profitability. We have positive gross margins. We have positive contribution margins through operations. That business is on track as we scale our deliveries. In terms of 3C, that is a recurring revenue base that is driven by the installed base of vehicles. And we are now not only supporting the vehicles manufactured by 3ev, but also third-party OEM vehicles where we are providing battery and care services for those vehicles. So as that installed base of vehicles continues to expand, we will be achieving EBITDA positivity this year and profitability the year after.
All right. Peter, you're doubling down on R&D from regenerative braking and advanced materials to solar-enabled cold chain EVs. Which of these innovations will hit the market first?
Well, in terms of from our point of view, cold chain is a unique and technically challenging requirement that our customers have expressed to us. That's because of the energy scarcity on an electric vehicle. It has to be very efficient. So the weight and the energy consumption of a condenser and active cooling device is not compatible with a three-wheeled electric vehicle. We have a passive solution that we've tested over the past year that has proven very successful in the marketplace. It's not just about the vehicle, however. The cold chain vehicle that we've developed also relies on infrastructure investments in charging as well as cooling with reliability through gensets at our charging hubs. So those investments are also being unlocked now with the Series A funding, and we'll be rolling that out.
All right. Peter, what's the one breakthrough technology or policy that you believe will redefine electric three-wheelers in India over the next 5 years?
I think when we look forward in the next 5 years, the things that we can anticipate, it's hard to pinpoint exactly what is going to be the leverage point. But certainly from my point of view, solid state battery technologies being introduced in larger formats that will support EV mobility, three-wheelers, four-wheelers, that's going to be a major breakthrough. I think in terms of power electronics, driving down the cost and availability of power electronics, particularly in terms of supercapacitors, so that higher efficiency regenerative braking is out there, but it's about driving us from sub 10% efficiency, maybe mid-teens efficiency that we're seeing in the market today, to 20, 30, 40%. When we talk about lower speed vehicles that are stop and go, like category L5 three-wheelers, they are perfectly suited for very high efficiency regen braking. What I see in the next 5 years is that, range anxiety is not going to be a concern in the EV space. And that's really going to be driven by breakthroughs in solid state batteries, power electronics. And actually, when we look further into the future, I think electricity as a resource, especially when we compare it to fossil fuels, it's going to be a socialized resource.
Absolutely.
And when we think about electric availability, it's no longer going to be a constraint on mobility and other types of things. And we already see it today. When you're charging your mobile phone, nobody's asking you to dip into your pocket and pay for it. It's already socialized, it's available.
Well, we're pressed for time, Peter. I'll have to wrap up this conversation, but many thanks for joining us on Startup Street, and wish you the very best with all your growth plans.
Thank you so much. It's been my pleasure.
Well, on that note, it's time for us to